So every now and again I'll do one of these videos and it's talking about my journey or where I've been or where I'm going to and stuff. And the idea is to sort of share that journey so that hopefully you can take from it whatever you wish. And at this particular stage of my career, it's taken on a new sort of shape for me, because ultimately there's a problem that I have that I can't specifically overcome myself. However, it's really not going to be a problem for you, but I hope that it does become a problem for you one day. So yeah, if you want to learn what this problem is that you definitely want to have, then just watch the rest of this video. So when I first started trading, I had this problem. It's like, how do you get to those much bigger levels? How do you get to very large stakes and big profits and all of those things? So I learned that actually one of the tricks to being able to trade effectively was not to do that, was not to get to massive stakes, but was to actually do reasonable stakes that fitted within inside the level of the market. And then you just do those trades again and again and again and again and again. And that's what I discovered fairly early on. When I started, I can't remember and I can't confirm and say this is definitely true, but I sort of remember starting with about £1,000, splitting the bank in two so that I had money to lose. And then I started actively trading with just that £500 bank. So of course the stakes that I used back then would be very small. They would just be sort of, tens or hundreds or whatever. But I came across a problem fairly quickly, and that was that when you're using stakes within the market, almost your desire, your aim, is to actually try and hide from the market. Because if you use a stake that's too big, other people can see you, and then you can actively trade against that. So when we're trading order flow, what we're looking for is we're looking for those little clues in the market, for the general direction of the market, where money keeps appearing and where stuff is, basically. And if you stay inside that, if you don't show yourself within the market, then that improves your chance of a successful trade. However, if you use a large stake, Freudian slip there, if you use a large stake, then the problem that you have is people can see where you're on the market, people can actively trade or arb against it or do all of these sort of things, and then it becomes much harder to put that trade through the market. So one of the first things that I learned to do was, in order to increase stakes, if you did that, you affected the outcome, the chance of getting a positive trade. So I'd very often split up the stakes and sort of try and hide within the market. Now, of course, if you're just starting out, you're not going to be using big stakes anyway, so it's not a problem. So certainly when you're starting out, that's not going to be an issue for you. But as you grow and try and increase your stakes, that is going to be one of the major issues that you face. So I wanted to get to those much higher levels, and increasing stakes actually worked against me, because if I just used larger stakes within the market, you tended to influence the outcome of your trade. It wouldn't be as successful. Your strike rate would fall. You'd have all sorts of issues. Your orders wouldn't fill, blah, 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 blah. But the net consequence is the bigger the stake you use, the worse the strategy seemed to work. So what I then started to do was to work in lots of different markets and develop strategies for like pre-off, for in-play, for football, golf, tennis. I tried to develop as many strategies as I could for as many sports as possible, because by increasing the volume of the number of trades that I was doing in the volume of the markets, that got me to that higher level. On an individual basis, the individual trades were sort of relatively small and fairly insubstantial in the scheme of things, but on a bigger basis, that all added up to a much larger number. So, one of the things I would recommend to you is, if you have a strategy that's generally working and then you try and scale it and you find that it stops working for some reason or another, develop another strategy, look at a slightly different angle, take that strategy, vary it slightly, and do something else interesting with it. Because that's how I overcame that volume barrier, was I realized that sometimes I would accidentally influence the outcome of my trades, and therefore the best way to get around that was just to develop more strategies in more markets and do more things. And that allowed me to start really pumping up the volume that I was putting through the market, and allowed me to reach much higher levels in terms of the profitability that I could get over the course of a year. So yeah, that was a neat little trick that I learned in terms of trying to scale up. It wasn't necessarily increasing the amount of money that I was putting through the market. It was just doing more things within the market, and sometimes multiple strategies within the same market, and different market states in terms of pre-off, in-play, and different sports. That allowed me to scale things to a different level. So one of the interesting things that has influenced how I've been trading in the last couple of years is the amount of volume that goes through the market. Because if you think about the way that volume works, if the volume is up here and I'm using full stakes, that's great. But if the market has shrunk by 30% or so, then necessarily my stakes will have to shrink by that amount as well. So the amount of yield you can get out of market is lower than it was before. And that's sort of generally the pattern of behavior that we've seen on exchanges. Regulations in different countries have shut off custom from those countries. And, regulation in the UK isn't particularly favourable either. So that has created a decline in some markets. Some are growing, some are shrinking. But necessarily that means that I can't stake as much as I used to, and that means that I can't make as much as I used to. And this is one of the core issues for me, but not for you, because a lot of people are on that upward curve or then nowhere near that sort of scale in terms of what I'm likely to do in a year or so on. And therefore, that isn't necessarily going to affect you. And there's a whole world of fun in all of the markets that you can participate in. But because I've explored many different facets of that, my response to lowering volume has been to lower my stakes. And that necessarily makes it impossible for me to sort of beat prior years simply because the money isn't there. It's a simple fact. So that's why I'm constantly fighting for exchanges and trying to push them forward and promote them as, which they are, the most viable betting medium that you can have. But obviously the industry isn't particularly keen on exchanges either, because they can get like 50% out of people on a Grand National or 103% or 105% on an exchange. So necessarily they have an incentive to push really bad value products. That's why I keep producing these videos and keep pushing back against that. But because of all of those factors, the volume has decreased and I've had to decrease my stakes. So it's a big problem for me, but not necessarily for you, because obviously it's a nice problem to have that you want to be up using those large stakes. So yeah, that has influenced how I actively trade the markets now, but hopefully that is not going to be a problem for you. So here's another curiosity. If you give me £1,000, I can perform miracles with that. If you put it in a bank, you'll maybe get 4-5% if you're lucky. So you'll get a very small return on that over the course of the year. But if you give me £1,000 to trade on sports, I can double that very, very quickly, because that amount of money, I wouldn't use all of that in one go. I would break it up into smaller stakes, and then I would recycle that through the market as many times as I can, which is what I suggest that you do and you should be doing. So as a consequence, I can get sort of 3 or 5% in a market. And of course, not every trade wins, so you'd have to balance that out with some losses and so on. But necessarily the yield you get on the stake is absolutely huge. And as a consequence, you have this really weird side effect. This is the second major problem that I have, in that if you have a small bank and you're using small stakes, you can get absolutely enormous returns. But if you gave me £1,000, I could double that very, very quickly. But if you gave me £100,000, that would be a lot harder to double, because I just wouldn't use most of that bank most of the time. This is the unique thing about trading on sports versus the stock market. When you're trading on sports, you get a new sport coming along every few minutes or half an hour or whatever sport you're trading. And that money is free to use again. So you just recycle it again and again and again. But obviously that stake remains fixed. The market opens and closes, and you can use it on the next market and the next market and the next market and the next market. So you can really chuck that through the market and get pretty astounding returns on that individual bank. But that poses a problem, because obviously, if you give me £100,000 now, I'd just give most of it back to you, because it's like I just don't need it. Maybe I'd use 10 grand or something, but I probably wouldn't need much more than that to get a decent return per month. So one of the great problems that this creates is that any money that I've made through trading, I only ever need to retain a small bank, and the rest I invest. And when you invest in the stock market or you do trading on financial markets, one of the advantages you have, these markets are worth trillions. And as a consequence, putting a few million through a market worth trillions, nobody notices. It just, the money goes in and it doesn't influence the market whatsoever. But you try and put millions on a football match or Kempton in the evening in the winter, obviously you just can't do that. So any money that I've made from trading that I don't need to put back into there, I've just invested. And over time, that has grown and grown and grown. So as a consequence, I need to spend more time doing that now, because the yield I can get from investing and trading on financials is much higher than I can now get on sports trading. But of course, that sort of says, well, what are you going to do about sports trading? Well, the great news is there's absolutely no way I'm going to give that up, because I love it. It's one of the highest yielding things that I've ever done. And also with things like automation and that, even if I don't trade a market manually, I can let the automation work away for me. So I can't see any prospect of me ever stopping doing that. Now, why would you? When you can invest a relatively small amount of money in there and get a decent yield from it, it just doesn't make any sense to ever stop doing that. And the fact that I enjoy it, and obviously I enjoy watching sports and actively trading them, is just an absolute pleasure. However, my focus obviously does have to spend a little bit more time on the financial stuff, simply because that's become a problem for me. However, it's an absolutely fabulous problem to have, and I hope that it is one that you would have too. But yeah, it's a problem, but I mean, what a great problem to have. So if you want to see what compound growth looks like, I'm going to show you two charts. One is of the S&P 500 and the other is of Berkshire Hathaway. And the reason for bringing these up is these were actually mentioned at the end of an interview that I did with Bloomberg Radio. And when you look back at the amounts that were mentioned at the end of that interview, it really brings home just what compound growth can do.
Are you happy with the shares' performance this year?
It's obviously could be a lot better, but certainly in terms of most value investors, price is not as important as the value that's within the share itself. So certainly I think that there's enough value within there, but I think the price is lagging its intrinsic value at the moment.
Peter Webb heading off to his fourth Berkshire Hathaway shareholders meeting. Berkshire shares today up $749. 84,350, volume 760 shares. The Dow, the S&P, NASDAQ all higher today. The S&P higher by 13 to 1156. The Dow up 122 points. NASDAQ gained 17. Coming up, a preview of next week's Fed meeting.
So now and again, you have to think about, what do I want to achieve before I run out of time to do it? Either you come across a problem or you die or something. You don't want to think like that, but you do want to think about things that you would like to achieve. So one of the things I've always sort of fancied doing is taking some of the concepts that I've learned in sports market back into financials, but doing it seriously. I've fancied, how do I get to some astonishing level on the financials? And I think that this is probably the way that I would do it. But that will impinge a little bit on some of the stuff that I do elsewhere. But it's one of the things that I sort of fancied giving it a shot before I get too old or too bored to give it a go. So yeah, that's one of the reasons that I'm going to just shift a couple of things around in order to give myself the best chance of learning or taking across to financials some of the things that I've learned from trading on sports. So the core of my problem here is that sports markets haven't compounded and grown in the same way that other things that I do. And that's left me in this situation where they're throwing off more money than I can actually put back into them, which I've invested. And I think this is a good goal to have. I mean, why not? If you can get yourself to that stage where you're being consistently profitable, you will find the same thing as well. And when you're looking at the markets, you can't shovel all of that back into the markets, not safely anyway, and your strike rate will drop. That's what I found. So why not take the opportunity to start investing and doing other things with it as well? And I never sort of intended it to be that way, because when I first started, I thought maybe I'd make 100 or 200,000 or something like that. And then I could do something serious with the money. But of course, this turned into something very serious. And I would still love to see it grow, and I'm still going to fight for that. And that goal is still achievable. You may have to achieve it in a slightly different way than the way that I've done it. But it's great when I speak to BetAngel users and hear what they're up to and the sort of things that they're doing, how active they all are, despite some of the challenges that have been thrown at them. So yeah, I've got a couple of little problems within the market. They're a really nice problem to have, but I hope that you will have them too.